He's angry about mortgages. It's Angry Mortgage. He's swearing. He's cursing loud. He's old. He's opinionated. And he's been doing this so damn long. This program is about mortgages, and this is mortgage advice, but the advice may not apply to your situation. Contact licensed mortgage professionals for specific recommendations before you make decisions about mortgages. You may not agree with Ron, but if you don't, he thinks you're wrong. Oh, and did we say there is a lot of swearing?
Okay, we are back, and we're back with Samantha Power, mortgage broker extraordinaire. Well, it's true, Samantha Power. What is it? What are we calling your operation?
Like, what am I, like my office?
Yeah,
I'm just Mortgages with Samantha Power.
Mortgages with Samantha Power, and you're on TikTok. We can find you on Samantha.
That's how we met.
Exactly. Just search for Samantha Power on TikTok.
Mind you, there's a bajillion fake accounts, but
oh my God, I got 1,000 of them. Okay.
I am losing my mind.
Oh, it's awful. And you're also on Instagram.
Yep.
And same handle.
Yep.
And you're on YouTube.
A little bit.
Same handle. Okay. You gotta go harder on YouTube.
I'm
YouTube's
trying.
Great.
I'm trying.
YouTube's great in the
end.
It's
a whole new ball game.
But it's work.
100%.
They make you work on YouTube.
Yeah.
They really do. So, but it's a good platform.
Agreed.
And then on TikTok, Samantha is fantastic because I cheat on TikTok. I'm doing a lot of swearing. Sometimes I just do opening 60 seconds just swearing in general.
I think I just saw a thing of yours the other day on TikTok where it was all your best one-liners.
Yeah, all my best swears. Okay, yeah. It was all my best swears. Okay. So I'm swearing like crazy. I'm doing politics. I'm doing real estate. I'm doing housing policy. Samantha's just doing mortgages.
Yeah.
Mortgages day in and day out.
Yeah,
mortgages.
That's all I do on there.
And she's good on it. And she's got a ton of followers. And she's something that I try to tell all other mortgage brokers, but they don't listen. Samantha could actually write a 300-page instruction manual on how to do good on TikTok. She could put it in every mortgage broker's hand in Canada. They'd still fail. Okay?
I'd make a boatload of money off selling that, though.
You might. Mortgage brokers are cheap, though. Okay?
Yeah.
They're pretty cheap.
Yeah.
But because Samantha will tell you something that's interesting and helpful and meaningful for that minute, okay? For that point in time. If you're thinking of doing a mortgage thing, her stuff is informative and interesting and factual, okay?
Yes.
The other thing, factual, because we're going to talk a little bit later about non-factual shit on TikTok for mortgage brokers.
Yeah.
Or highly biased shit, let's say. So I'm really curious about what's going on. I know a lot about what's going on in the city and in Hamilton and in Niagara, but what's going on just north of Toronto? What's up?
So in our area, we definitely have listings like crazy.
Yeah.
Like houses. It's a buyer's market. If you're a buyer and you're looking to buy, now is the time to buy because you've got your pick. So house listings are up like crazy. They're all over the place. Prices are down.
And prices... I think we talked about this earlier. Prices are really down in the last 2.5 months.
Just recently. Yeah. Appraisals are hurting.
Yeah, we're getting crushed on appraisals.
Yeah.
And surprising stuff. And I would say that it's fair to say it's regional, I think. And it's fair to say it's the quality of the house, too.
Yeah.
Wouldn't you say that it's a great, great house in a great area, that's a well-known sort of sought-after area, and it's a great house, well-maintained, good upgrades.
Right.
It's still down.
Still down.
But it's not way down.
Right.
But if you haven't taken care of your place, and
it's way down.
It's way down. It's way down. Okay, yeah, it's way down. And I know this sounds like a lot of listeners will say, "Oh shit, you should expect that." No, we've watched something happen in the last 3 months that's unusual.
Yeah.
Because it was gradually coming down for 1.5 years, nearly 2 years, and now suddenly, boom, it's down.
Down. Yeah, it's been shocking the last couple of months. And it's not just me. Like, you talk to other brokers too. They're feeling the same thing. Appraisals are just legitimately killing files.
And it's also that some of these appraisal reductions are shocking. Like it's, in the worst one we saw, it was 22% in 1 year.
Yeah.
1 year. Like it's down from the peaks 2022, like February, March 2022 is the peak. This was down in 1 year.
Yeah.
12 months it's down. This is incredible amount, okay?
But Canadians still think that their house is worth what it was worth in 2021.
Yeah, I mean, let's face it. You and I have been doing this for a while. You started when you were 14.
Yep.
We've been doing it for a while. I'm just old. But we went through such a long period of absolute romance with real estate.
Oh yeah. Canadians are totally stuck on the fact that they can buy a house and it has a few $100,000 worth of equity in a year and a half.
Shocking, right?
And that's not the case anymore. We need to get back to the homes are long-term now. You're going to buy a house and you're going to sit in it for quite some time before you start seeing that equity build up.
Yeah, thank you, because that's the right thought process. The right process today is all you people who are thinking about, oh, I'm going to get on a property ladder. Well, your first step on the ladder may last 10 years.
Yep.
Okay, and that's going to become so important to understand. Okay.
Yeah.
Because purchases are up a bit.
They are. First-time home buyers.
Yeah.
They are in the market.
And that just makes sense because it's the sort of the meeting place of lower rates. Because we got every rate's below 4, right?
Yeah.
Or if it's not, you're getting screwed. Is that fair?
Yeah, for the most part. You're in the 3s, low 4s.
Yeah, but you can probably squeeze them
you can squeeze them
for $399.
Yeah.
Like you can squeeze them. But damn it. I mean, that's interesting to first-time home buyers.
I'm glad to see first-time home buyers returning.
Me too.
Because it was scary. I mean, having kids, your kids are older than mine, but I sit back and think like, Christ, my kids are going to live with me forever. And I've got 3 of my own and 2 stepkids. So I'm like, what the hell do I need to do to fit all of these children for the next 30 years?
Slow down. 5 kids in your house?
Well, we have separate homes right now, but I've got 2 stepdaughters and then I have 3 of my own.
Oh.
4 of which are females.
Oh, there's some washroom terrorism going on here, right? Well, you probably have lots of washrooms.
No.
No? Jesus Christ, that's a lot. Oh my God.
Yeah. So when I think of like housing market and the way that it was going, it was terrifying.
Well, yeah, that's because, and as a result of that, you and I saw so many parents chipping in big money.
Yeah, parents,
big money.
Grandparents.
Yeah.
Wild.
And that's not a good thing, is it?
No.
It's not a good thing for people to be digging into the retirement money to...
Nor do people in their 30s and 40s want to have to ask mom and dad in their 70s to help them buy a house.
Damn if that's not true. That is so true.
Like, I thank God I bought when I did when I was younger. I didn't ask for mom and dad's help. I'm sure it was there if I needed it, but I didn't need it.
Yeah.
The last few years, it's been needed.
And needed as a cosigner in a lot of cases, too. And you know, I both know cosigner is dangerous.
It is dangerous. Okay. It can be, yes.
Yeah, I mean, we've seen this shit happen. I mean, like it's because it's if values drop, which we're watching happen, you can never get them off.
No.
You never get them off, and you might need to get them off because one of them might be in the hospital. Okay?
Right.
So
yeah, cosigners can definitely. I mean, there's pros to having cosigners. They can be great, but they have to know the cons of being a cosigner.
And you as the homeowner, getting your relatives to co-sign, have to appreciate that they may want off someday.
That's a conversation that I have anytime a co-signer's been put on. Listen, depending on the term we're going in, the goal is to get them off in the 2 years or the 3 years. These are the steps. God forbid the market corrects and changes and it drops. Well, we've got an issue there, but this could also affect them needing financing on their own personal things.
They may not.
Right.
But it may.
It may. Okay. And if it does, you got to be in the position of when they come to you and say, hey, your house is now screwing up my financing for whatever I need to do.
Or helping the next sibling.
Or helping the next one. You might be put in a spot of, okay, well, I can't afford to take this house on my own or qualify on my own. I got to sell to get them off.
It's nuts.
Yeah. So there's definitely cons to it. There's pros to it. There's been a lot of co-signing situations where it's worked out. It's been great. People wouldn't be in their houses because of it. The co-signers came off. Everything's good. But there's definitely cons to it.
So let's get back to the sort of value reduction experience we're seeing. I have a sort of a general theory about it. And sometimes people are saying, well, it's the great renewal wave. It's people's payments going up. But you and I see it, and we know the payments don't really go up that much.
They're not.
Okay.
Even clients, when you have that renewal talk with them and you give them their payments, they're like, oh, that's it?
Because some of them were thinking if the rate doubles,
their
payments
doubling.
Yeah. So Samantha and I are here to tell you that's not how it works.
That's not how it works.
It's not how it works at all. So if the rate goes up, the payment may go up. Well, first of all, your principal payment goes way down, okay? Yeah. Your rate goes up 20%, 25%, And let's face it, the theory is in 5 years you make a little bit more money.
Right.
Right? That's the theory. So
Yeah.
Is it fair to say that you haven't seen anybody wiped out by that scenario?
No.
But we have another scenario that we got to worry about, which you talked about earlier with me, is unemployment.
Yeah. That's a scary, those numbers they're not good. And I think they're going to be even worse.
And you see it.
Yeah.
You hear from people, you talk to people, because I know you get a lot, you're similar to me, you get a lot of leads, you talk to a lot of people just reach out to you through your social media situation. Mm-hmm. And what are you hearing?
The job loss numbers are big. People are losing their jobs. People are scared about what's to come with losing their jobs. There's a lot of industries out there right now, colleges.
Oh, man, the colleges. Oh, my
your
God.
Professors, all of them. I mean, they're shutting down colleges, places, right? So there's going to be professors out of jobs who, if you were a professor 15 years ago, you thought you were set for life.
You did.
That was an impeccable career. You've made it.
You're set.
You were set.
Yeah.
Not right now.
So this is, of course, the hellacious catastrophe of the community colleges that ran nuts on foreign students.
Foreign students, yeah.
And now that's all being cut back 90%.
Yeah, it's hurting them.
So yeah, there's consequences to bad government decisions.
Of course,
really bad. That was a bad one. Okay, like what was anybody thinking when they thought they could increase students by like 400,000 in Ontario? Like, what were they thinking? I
mean, you get into the political part of it, but I don't think our government thinks much.
They sure as hell didn't think about that one at all. Okay, like I mean, wouldn't that strike you as what was it last year? Oh, it was 80,000. What's it this year? 400,000. Say that again? What?
Yeah.
Like you would think, right? But yeah, so that also kind of sifts into some of the value reduction, right? Of the houses. Okay.
It concerns me in areas with those smaller colleges and colleges that are closing campuses. What happens to those homes?
You mentioned London. So we don't
I'm seeing a drop in values in London. I've had a few in the last little bit where the appraisals have come in and I'm like, what?
We're like but you figured that was, and we know, by the way, folks, this is true. Like when you're valuing homes, even if it's not a student home, if all the surrounding neighborhoods have student housing and they're all bid up during that period where 400,000 people were pouring in,
right?
And those comps were there then you bought at that price. But now as the students are flooding away, and again, you may not be the student home,
right?
But you are now the victim of it.
You are impacted by it.
Yeah, 100%. So, yeah, I mean, I think that's a very meaningful thing, and we're going to see more and more of it because power sale, and we've all seen the stats.
Yeah.
Like, what was it in the TREB system? It was 400 more 200 more this month, the previous month, than the previous month. So it's running at like massive.
Yeah, they're definitely up. Area dependent.
Yes, definitely.
Right? Yeah. I think we're seeing more. I mean, you would see more up here.
Yeah.
Right? Than I do back in the...
But to your point, it's very regional.
Yes.
Okay, so we see a lot more in Brampton. We see a bit more in Scarborough. Mm-hmm. And like you pointed out, for some of these smaller centers, they were very like education oriented. Like what London's got a lot going on in it, right? There's colleges and big universities. So it's and I don't know how it's going to finally come to pass. Like I don't know. I don't know.
Where it all levels out.
Is it fair to say investors are dead? Like nobody's buying anything to rent out, are they?
Not as many.
Mm-hmm.
Dead? I don't know about dead, but they're not like they were.
And are they buying something that's different now? Are they buying, like, not just buying a condo or buying I
don't have any condo sales on my desk.
No, I don't. We don't. We only have the problems.
Yeah.
Right? Yeah.
Yeah.
We got the problems of, hey, I bought this 5 years ago and...
Mm-hmm. Yeah, investors have never been a big part of my portfolio. Mm-hmm. But if you think back to COVID times to today, nobody's buying them like they were.
Yeah, well, I think we run into some of these weird things where they want to buy a fourplex or something. They're still trying to hold on to the dream of real estate empire, but not working out. So
yeah, it's definitely it's COVID was what 5 years ago. What are we 2025? It was 2020ish.
March 2020. Yeah.
Yeah. In 5 years, which seems so long but so short at the same time, mm-hmm. it's wild. I mean, it's crazy what's happened. Housing market at an all-time high. Now it started dropping. Now it's it's dropped. Interest rates sky high. They're coming down, but we're seeing still people nervous about getting back into the market.
Well, to your point, the economy, particularly in Ontario, is crappy.
Yeah.
It's really crappy. Okay. Yeah. And no solution in sight that I can see right now. I just don't see it. Like, I mean, maybe there's a trade deal, maybe not. Who knows what the trade deal looks like? But even crazy shit like the postal strike, right? It's like, I mean, I know most people say, well, how stupid are you, fat man? You're still using mail? I said, well.
We have to sometimes.
Sometimes we have to, okay? Yeah. That's just it. Like,
or think of your seniors.
Right.
My parents.
I am a senior, for Christ's sakes, okay?
My parents, like my dad's still the guy that goes into the fucking bank.
He goes to the bank.
Oh, goes to the bank.
Oh, my God.
I think he just learned. I just had a conversation, I think, last week with my parents, and my dad just learned how to e-transfer.
Oh, my God.
And my dad's young. Like, my dad is... Oh, fuck. How old's my dad? My dad's in his 50s, like late 50s.
Late 50s?
Yeah. So that's still young.
He can learn how to e-transfer.
My dad,
for sure.
he's learned.
Yeah.
But man, oh man, is it... Like, I'm like, you just learned... How have you been living?
Well, they go to the bank.
Because he goes to the bank.
Go to the bank. That's
right?
all.
So postal, for a lot of people, that's still a real thing.
Well, not just that, but it turns out there's stuff that you and I don't get involved with. It's people running little businesses out of their basements.
I have clients that, one of my good clients, she said this postal strike, the second time, they run a business and a lot of their stuff is through the mail. And she goes, it's annoying. She's like, I'm now driving to pick up checks because that's still how the smaller businesses still operate. And
some people were actually mailing from their house to their clients. Yeah. That's how they got, because I guess in some things, like if it's small enough and it's light enough, you're much better off. The rates are much better with the mail. But you know, if you want to switch to UPS or Perlite or something, the price goes up a lot.
Well, look, I mean, you cut out Canada Post for on a strike. Why wouldn't the big guys step in, put a premium on it, and make more money? That's business. That's what they do.
We could be damn sure there's no discount.
Absolutely not. Right?
And yet, you know, that's meaningful. Like a lot of people say, well, I don't understand. Like, because a lot of people are lucky. They're in jobs where nothing much changes. Like if you're two teachers in a family, you don't notice much. No. None of this is very meaningful to you. You didn't use Canada Post anyway. But for some people, it's big. Last year, Canada Post screwed me over for sending out client Christmas cards. Okay. And I'm sitting here thinking, okay, Christmas really isn't that far away. What's going to happen? Am I going down this same route where my Christmas cards sat past Christmas? I know. And then we had to add a little blurb into all of them saying, like, wish this got to you before Christmas. Hope you had a great Christmas. Hope you had a great New Year.
Right. So, yeah. I know. There's just little things that Canada Post, But all of this contributes to a kind of dysfunctional economy. Yeah, our economy is shit. It is shit. And yet, we're both glad to see that first-time home buyers, because there isn't really much. Do you see much move-up buyers? Because we don't. We see that. No, they seem to be sitting still right now, and I think that comes down to the whole. There's not a lot of confidence in the market right now. Yep. People are scared, right? They don't know, is this the time to move? Even if they need to move, they're sitting because their houses aren't going to sell for what they wanted them to sell for or what they think it's worth. Just the no confidence. So have you run into this shitstorm of the realtor talk them into buying first and waiting to sell? I'm still running into real estate agents trying to get clients to go in firm without offer or without conditions. Holy shit. We are not in that market. No, you have no reason to do that at all. You should have every kind of condition you can possibly have on your offers right now. It's a buyer's market. Take advantage of it. Yeah. Shit. Mind you, I know up in like Thunder Bay, they're in like multiple bidding wars right now. Yeah. Right? Yeah. So area dependent again, but for the most part, we are in a market where you can put every condition on your offer and it'll still get accepted, or it should get accepted. And if they're not accepting it, move on to the next house. It's not the house for you. There's another one. Exactly. You got a whole selection of homes waiting for you. Yeah. So roll back to this difficulty that we're all experiencing in the valuation of homes. Like, I don't think this is going to get better soon. I don't know when it's going to get better. I would love to see it get better. But that certainly really emphasizes your point that if you're thinking about buying today, it is really, really important to think in a 10-year mode. Yeah, we have to get back to the mentality of, I'm sure back when you bought your first house, my parents, when they bought they weren't buying houses to flip and move every 2 years. No. My parents are in the same house I grew up in. Yeah. They've been in that house 30 plus years now. Yeah, I've been in two houses in 30 years.
That's it.
Right? So
Yeah.
I think it's getting back into that mentality that you buy houses to not make $150,000, $200,000 in equity in a year, like we saw during COVID. People were buying houses and moving in a year and a half. The amount of repeat clients I had during the COVID boom of real estate was insane. That's not it anymore. And we have to get back to that mentality of you're buying a house and you're staying in it.
And it's not an option,
Right.
because, 2 years from now, it might actually be worth a little bit less. No matter what your realtor says to you, it may be worth less. Okay.
Historically showing, if you look at the history, our market goes up, our market comes down. Our market goes up, this is nothing new.
Except that we had this long run before.
Exactly.
We had 2009 right through to 2023.
It was a long run,
and
but
it was a long run.
we still, before that, you saw it drop.
Oh, shit, yeah, absolutely.
Right? So we just have to get back to that mentality. Clients have to get back to that mentality of, we are staying in our house. This is our home. We're buying it for the next 5, 10, 15 years, not 2, 3 years.
Well, that's what I'm telling people. That's what I'm talking to my sales group about, is that you got to start thinking 2030s. Okay.
Which really isn't that far away.
But just get the 2-3 year stuff out of your head.
Yeah.
Because that just is not happening.
Yeah.
Okay. And that's logical. And a lot of times in the past, that's been the way it was. I mean, and you and I both know, if you can make the payments, sitting in your house doesn't change your life. If your house went down in value, make the payments. That's it.
Update it. Keep it nice. Do what you need to do to it to make you love it again. I get it. We all go through our houses and I've been in my house now for 10 years. I hated that fucking house when I bought it. I hated it. And I remember I bought it with my ex-husband at the time, and I remember walking in, and he liked the decor on one of the walls, and I was like, I'm not buying the house because the decor on the
One wall?
Then we got divorced, and I'm like, I'm stuck with the goddamn house that you loved and I hated.
Just for one shit wall.
For one shit wall. I've updated the house, I've redone everything, and now I like my little house. It's mine.
All right. That's funny stuff. One shit wall.
I was like, I really like that decor on that wall. I'm like, I'm not buying the decor on the wall.
I know. It's weird. It's easy to fall in love with one feature, and it doesn't always work out. But the
staying
main thing
in homes, updating your homes, falling back in love with it again, paying off your mortgage or paying it down.
Yeah, can we talk about that for a second? I mean, and we're going to now then move into our specialty topic of other TikTok and Instagram mortgage brokers, okay, in a second. But yeah, I mean, what happened to the idea that the best thing to do with a mortgage was get rid of it?
Right.
I think that's still a very good idea, is to pay it down.
I think the dream is still to be mortgage free. Right?
100%. Okay.
I don't think there's a Canadian out there that can come back at me and say, no, I want to carry a mortgage for the rest of my life. It's sad seeing 70-year-olds now having to remortgage their houses.
Because you do see it.
100% you see it.
Yeah, and we're not kidding anybody. For the listeners, I want to tell you, for the viewers, we see it.
Yeah.
It stops us. Like, hold on, how you've got $300,000 on this property and you're 71? Like,
right.
I mean,
or the ones that are remortgaging, and no fault of their own. Like, these are people that had great careers growing up. They had savings of what they thought were going to be enough, and then the country we live in just decided to skyrocket everything, and the cost of living is just unaffordable, especially for seniors who thought that they had saved enough. It's really sad.
it is sad.
Yeah.
It is definitely, we see it.
Yeah.
You see it. And like a lot of times, the public's reaction to that is, well, they made a lot of mistakes, or
No, they didn't.
Well, sometimes they did.
100%.
But sometimes life just happened.
Absolutely.
Okay? And that is very much a symptom of a difficult affordability and way too much promotion of real estate as a source of wealth. Like, in theory, in all the rest of the world, like investment is a source of wealth, or opening a business is a source of wealth. But we got hooked on houses be a source of wealth. Yeah, trading in houses is wealth. All right. Yeah. And in the end, it doesn't usually work out.
When I have clients come to me, I have clients now that, they're in the 100,000s and they're in their mid 40. They owe like 150,000. And I said to them, like, I congratulated them. And I said, you guys are doing really, really well. And they were like, we don't feel like it. And I was like, I can tell you, you're doing really well.
Sure you are. Right? Absolutely.
Yeah.
But I also, if they have a couple of kids, I can also concur with them. I don't have any kids at home, but I can concur with them that you and I talk to people all the time who say, Jesus, I mean, the car insurance went up 9% and the kids' sports stuff has gone through the roof.
Let's go back to unemployment and the amount of young like teenagers and stuff that can't get jobs.
There's no summer jobs.
There's no jobs for them anymore.
No.
So parents are fronting everything.
Yep.
Yeah, it's a lot.
It is a hell of a lot.
But we see all different walks of life. And yeah, there's definitely people out there that thought they'd be mortgage free by now that just simply aren't.
Hey, look, there was this incredibly brief moment in time at one point in about towards the end of 2020 and through part of 2021 where people could take advantage of bizarre rates, like between the Bank of Canada, COVID rates, quantitative easing, all that bullshit. I had millionaires call us up and say, hey, I don't have any mortgage, but is it really 1.59? Is it really 1.59 to get a mortgage? I said, yes, it is. He says, well, then give me $1.5 million, okay? Because I can do a lot better.
A lot of money.
I can do a lot better with my side than a 1.59. And they were right. They were
100%.
just right, okay?
100%.
You know, the weirdest thing is that I think some of those, by the way, that's not everybody, folks. No. That's far from everybody. But it happened. Yep. You and I both know it happened. Yeah.
People were pulling. I mean, it was something that was spoke about too. If you have those investor clients that are really good with their money and they're sitting with no mortgage on their house, to borrow money, generally speaking, your mortgage is going to be your cheapest cost of borrowing.
Yes.
When it comes, like that is
personal borrowing,
right?
Yeah.
When you were getting that 1.69% interest rate, people were pulling money out and investing it and making money back.
Of course they were. Because
which was super smart on there.
It's below inflation.
Yeah.
It was below inflation. Inflation was like 1.5. Rate was 1.5. That's effectively free money.
Yeah. Yeah.
And it was a 5-year fixed. So during that course of time, inflation went to 8.5. Yeah. So, but that's like, we don't expect that to return. Not in my lifetime. You might see it again. You're young. You might see it again. Okay. But not in my lifetime.
I'll be retired.
You'll be retired. Exactly.
With 5 kids living in my house because I can't afford housing.
Which kind of brings us back to, a topic that you and I talked about, we've talked about it before, we interact on it a bit, is other people who are on social media in our business, other mortgage brokers, mortgage agents who are on social media in our business. And we'll just get one key point out of the way. To be a mortgage broker today has some drawbacks. Okay, the drawback is every bank will fight like hell on their renewals, period.
For the most part, yeah.
They will fight. Sure, there's a few exceptions, but you'd agree that they just fight like hell to hold on to the client. And they will drop rates. And they will even just, hey, I bet you've had this one. It's happened to us more than once, a few times. So we've gotten a great rate for the client. And the client goes into their bank to get whatever deposit check it is. We got a pre-approval, a great rate, whatever it is. And the bank says, hey, let's come with us. We'll match that rate.
Give you cash back.
And we'll give you some cash.
Yeah.
What do you think? We'll bribe you to come. Okay. I mean, and sometimes we can get the cash back. It's possible. But like that's out there because, and why? I've talked about it on the show before. This is the first time there's not this huge influx of sales in the last 12 years to keep growing banks' mortgage books.
Well, funny enough, you think about it, normally at this time of year, previous years, banks' rates are crap because they've hit what they want to fund in mortgages. Their money's done. And they're like, okay, people are coming to you and they're like, this bank's giving me 6%, rates are 4%. What the hell? And I'm like, yeah, they've hit their targets. They don't want your money anymore. It's not the same right now.
No. And again, it's because there isn't this massive influx of purchases that we saw. There isn't this huge refinance boom. Basically, some people are refinancing, but sometimes the lower values are stopping them.
Yeah.
But everybody needs to renew, right? So banks are saying, look, I can just see these CEOs and these bank bosses saying, we ain't going to lose a mortgage. Like, you're going to fight for everything. And unfortunately, and yet, there's still business out there. There's purchase business, there's refinance business, there's alternative business, there's all kinds of business.
There's the clients that didn't make their mortgage payments to that bank, so that bank's like, here's your letter of non-renewal.
There's that, sure. There's all, and even, there's even just people who are at the wrong place. Like you're at a credit union who that particular year had a great rate, and then now they don't have a great rate. So there's always business out there. And, for people like Samantha and our firm, we're talking to a lot of people. Just talk to a lot of people, you'll find those people. But unfortunately, some of our brothers and sisters in the mortgage business have decided that they don't like this fight on rate, okay? And they want to talk you into something that's kind of crazy, okay? So let's talk about that for a second. We're not going to labor the hell out of it, but there's some wild shit on mortgage broker Instagram, right?
There is, yeah.
And mortgage broker
there's
TikTok.
a ridiculous amount of mortgage brokers in the industry.
It's huge.
So, yeah, it's a big industry. You see the ones that try to sell products that are for a very, 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 very small group of Canadians.
Yeah, so we'll just hit the nail on the head. There's a product called Manu1, which is from Manulife Bank, which is a great product.
Awesome
product.
product.
It's terrific. What it's basically done, I would summarize it as saying, it's allowed prepayment to go on steroids. Okay.
Yeah.
And it has it has some smart associations. So, hey, we got a line of credit here, move the money around, push it around here. You got some money left over at the end of the month. You can instantly deposit it to your mortgage, reduce your mortgage. It's got a lot of great features.
An all-in-one product. It's your bank account, your line of credit, and your mortgage.
Got a lot going for it.
It's great.
Okay? Now, the thing is that all of our friendly neighborhood mortgage brokers that you and I know about are saying, hey, this is magic. You know,
pay your mortgage off in 8 years.
Or we'll save you $268,342.09 in interest if you just by using this product, okay? Which is completely false. I mean, Samantha and I know that mortgage is math, okay? Yeah. There's just interest, principal, payment. That's all there is. I mean, there's a little bit of differences between, you know, some prepayment ability in some banks, but it's all a lot similar with the banks we work with, okay? But this is not true. I mean, this is going to pretend that everybody's got a shit ton of money left at the end of every month.
And that's the furthest thing from the truth right now in our country.
That's 5% of people have money left at the end of the month. If that, okay?
Yeah, enough money to pay it off that aggressively.
Right.
It is a product that you, can essentially pay your mortgage off as quickly as possible in a very short amount of time. The amount of Canadians that have that type of access to money, the amount of Canadians that don't have any other debt and they have no problem dumping all of their money towards their mortgage and their mortgage only are a very select few.
It's tiny.
Very small amount of people. Okay. So my issue with it is fantastic product. It's a product that I would advise bringing in financial advisors and accountants to have conversations with, because a lot of brokers are also kind of pushing it as tax savings, which there is, but that is not our title.
Oh, we'll swing back to the tax savings guys in a second, but you know, and again, nobody up on Manu1, great product. But it, you know, if you're producing an advertisement on TikTok or Instagram that's saying it has magical properties, that's not true. And Manulife would say it's not true. Okay, they're honest people. It's a reputable company, very reputable.
Very reputable.
I got my own insurance with Manulife. Okay, like they're a good company.
Yeah, me too, actually.
But so I mean, they're great companies. So look, it's about people not wanting to talk about rate because they're feeling a little intimidated by rate. Mortgage brokers and agents intimidated by rate and thinking they're going to have a hard time finding a good rate, and yet they want to talk about something that's radically different that only applies to a tiny number of people.
Right.
But maybe the worst ones, and we're not going to name any names, but the wildest ones are people who are, in my opinion, and their call on this is, we're showing Canadians advanced strategies.
Right.
You've heard that line, okay? Which require a real tax strategy. It's a tax-based strategy. And I don't know about you, but I always worry about CRA. Like my lifetime experience with CRA is they'd rather fuck you.
100%. They wouldn't rather fuck you. They do fuck you.
They plan on it. Yeah. Okay, that's their plan. Okay. Yeah, so, and the other thing I know about CRA is they'll change their interpretation of something quarterly. Like, you know, you can get, you file one kind of tax return one year and you file exactly the same thing. And they say, we got some new ideas about this. Okay. New ideas about these expenses. Okay. Yeah. So we've got mortgage brokers who are talking about a product that has a tax element to it, a kind of a tax, well, they would say tax advantaging. We might say tax avoidance. Okay. And they also have an investment element to their discussions with their clients. And that worries the shit out of me because I'm neither am I a CA. No. I don't have that license and I don't have any kind of investment license. Okay. So my belief is don't talk about that. Now, their comeback is, and it might be fair, right, is to say, well, anybody can talk about anything. Okay. I mean, I can give opinions. I'm not pretending to be one of those advisors. Well, then you sure as shit better bring in those advisors.
Right. So there is brokers out there. I do know a couple that their entire database is the investor clients. That's all they target. And they do have their team of financial advisors and accountants, and they make sure that they're in on it. And they are doing that job properly. I will give them credit for that. When they have it fully set up properly, you're bringing in all the proper people to discuss this type of product. Good on you. Happy for you. The ones that are not bringing in those types of professionals, talking about these products and pushing them onto Canadians like they're it's the greatest thing.
It's magic.
It's terrifying, and you're treading in really dangerous waters, in my opinion.
Yeah, and again, I just think that you and I have been, again, you started when you were 14, but you and I have been around, okay, and we've seen a lot of business cycles and a lot of different real estate cycles and mortgage cycles, and even though this is a little bit, I know it can be disconcerting for some mortgage brokers, particularly new ones, young ones, new ones.
Yeah.
You're still young. And they're saying, oh my God, the bank's killing us on rate. What are we going to do? Okay. Well, okay. Do a good job with your clients.
There's a lot more than just, you're worth a lot more than just simply an interest rate, in my opinion.
And to your point, you don't have to do every single deal.
No.
You can say, well, if that's the offer you're getting from CIBC, Take it
and run.
Take it.
Funny enough, you'll see referrals from those clients.
You will, because you're giving honest advice, and that's what you do on your social media. Yeah. Always honest. What you just said, I've heard you say many times. Just take it and run. Okay.
100%. I get those calls all the time, and people are like, I get the response of like shocked, like, I can't believe you just told me that, or thank you so much for being honest and not trying to sell me something else or upsell me on something. That's not it. If this is what you're looking to do, this is what you're being offered. That's go, take it.
And there'll be another cycle in 6 months. Mm-hmm. And the bank may not be so aggressive. And some of our banks may be more aggressive. And some of our lenders may be more aggressive.
You become that point of contact for that client moving forward too. For any questions they have for new mortgage brokers, the database,
Look, I would summarize it like this, is that every mortgage broker, every mortgage agent, even, the bank commission agents are in a tough spot. They've only got one thing to sell, okay? Mm-hmm. But if you've got multiple products to sell, multiple things to talk to people about, you're not going to be able to do everything.
No.
So don't invent, I'd like to use this phrase, bullshit baffles brains, okay? Don't invent something that's so complicated or join up with something that's so complicated that in the end, that's what the client's faced with. Their client's with something that's so complicated, I don't know how it works, he tells me it's good, she tells me it's good, I'll take it. Because that's not real.
We've taken more clients out of that product than we have put them in.
Sure. And this is the key thing to tell everybody right now. Be prepared to stay in the house for 10 years. It is not a bad time to buy. It may be better in 6 months. That's why we're telling you to stay in the house for 10 years. Yeah. You may be disappointed. You go, hey, I didn't buy it at the perfect time. Hard to find the perfect time.
You can't buy it at the perfect time.
There's no such, it's so hard.
You cannot time the market.
No, it's so hard. Now, it's pretty obvious that this is a pretty good time, okay? But it may be better next time. Who cares? You're in a house you like, stay there. And finally, let's get back to just pay the mortgage off.
Yeah.
For so many people, it's such a better thing. Mm-hmm. And
it was the Canadian dream: own a home, be mortgage free.
Yes, exactly. Thank you.
That was the thing, right?
Thank you, Samantha. I got a couple of things off my chest because I know you think the same way. And thanks so much for being on the show. We appreciate it.
Thanks for having me back.
My pleasure. We'll get back again. We love it.
Yeah. When I got the email, I was like, oh, round 2.
Yeah, round 2. You're like officially friend of the show now. You're a friend of the show. Thanks so much. We'll see you next time, folks.
Thanks, guys. Bye.
If you like the pod, well, don't just sit there. Go to YouTube, Apple, Spotify, and all the other ones and like the pod. And don't forget to subscribe so we can keep being angry at mortgages and swearing about mortgages. Angry Mortgage could use your support.